Welcome to the Business Basics Hub Explainer. Let's just dive right into this, shall we? If you're starting a business, you've probably heard a ton of alphabet soup. LLC, C Corp, S Corp. And yeah, it can feel totally overwhelming. But honestly, choosing the right business structure is literally one of the most important first steps you'll ever take as a founder. So today, we're bringing you a clear, absolute no-fluff guide on exactly how to choose the right bucket for your business. I am so excited to break this down for you, so let's get into it. Real quick, a tiny piece of housekeeping. This explainer is for general educational purposes only. It is not legal, tax, or financial advice. All right, with that out of the way, let's jump straight into the good stuff. Here's our roadmap for today's explainer. 1. Intro and why it matters. 2. What is an LLC? 3. What is a C Corp? 4. Comparing pros and cons. 5. How to create them. And 6. Beginner mistakes to avoid. Section 1. Intro and why it matters. Protecting your assets. Now, you might be asking yourself, why does my business structure actually matter? I mean, why shouldn't you just start selling things, freelancing, or running your whole operation informally right out of your personal checking account? Sounds way easier, right? Well, doing that leaves you completely 100% exposed. And this idea of the legal wall brilliantly illustrates why. Setting up an LLC or a C Corp builds this crucial legal barrier between you and your business. It's like a fortress. If your business ever faces a nasty lawsuit, goes bankrupt, or gets buried in debt, creditors can only go after the business's assets. Your personal property, we're talking your home, your life savings, your car, all of that remains completely safe on your side of the wall. Without this legal wall, you and the business are considered the exact same person under the law. Yikes. Moving right along to Section 2, what is an LLC? The flexible favorite. So what exactly is it? A limited liability company, or LLC for short, is basically a hybrid business structure. And that word, hybrid, is totally key here, because an LLC gives you the absolute best of both worlds. It gives you the strong legal protection of a big corporation, meaning you get that legal wall we literally just talked about, but it also gives you the simple, straightforward taxes of a regular sole proprietorship. All right, let's hit the fast facts you need to know about an LLC. First off, the owners are officially called members, and there is absolutely no limit on the number of members you can have. But the biggest, and I mean the absolute biggest benefit here, is the taxes. An LLC features pass-through taxation. What does that mean? Well, it means the LLC itself doesn't pay federal income taxes. Instead, all the profits just seamlessly flow straight through the business directly onto your personal tax return, so you pay taxes on it just once. Boom. Plus, LLCs require very little ongoing paperwork, they're incredibly flexible, and just super simple to manage on a day-to-day basis. Next up, Section 3. What is a C Corp? The heavyweight. Okay, so a C Corporation, or C Corp, is basically the default corporate structure in the United States. Unlike the LLC, a C Corp is a completely independent legal entity. It acts as its very own standalone person under the law. Seriously, it can own its own assets, sign its own contracts, and pay its own taxes. Completely independent of you, the owner. Let's look at the C Corp fast facts. In a C Corp, owners are called shareholders because, well, they own shares of stock. It also strictly requires a formal board of directors to oversee major decisions. Now here is the crucial takeaway. C Corps are an absolute requirement if you ever want to go public or raise money from big venture capital investors. Those heavy-hitting institutional investors demand a C Corp because it allows for multiple classes of stock. You know, like preferred stock for the investors and common stock for the founders. All right, Section 4, comparing pros and cons, the head-to-head. Let's compare these two directly, starting with taxes. Because honestly, this is the biggest difference. Like we mentioned, with an LLC, taxes are paid just once on your personal return. But with a C Corp, you face what's known as double taxation. Yep, it's as painful as it sounds. First, the C Corp pays a corporate tax on its profits at the end of the year. Then, when the leftover profit is handed out to the owners as dividends, you have to pay personal income tax on that exact same money. The same dollar is literally taxed twice. That is a major financial cost you really need to consider. Now let's talk about the daily reality, rules and maintenance. An LLC is wonderfully simple to run. You don't need a board of directors, and the management style is super flexible. A C Corp, on the other hand, demands strict formalities. You are legally required to hold annual shareholder meetings, host board of director meetings, and keep highly detailed corporate minutes of all your major decisions. If you fail to keep up with these strict rules, a court can actually tear down your legal wall entirely and expose your personal assets. No joke. Finally, let's look at growth and funding. This really comes down to your end game. If your goal is to open a local business, do some freelancing, start a consulting firm, or hold real estate, the LLC is absolutely hands down your best choice. But if you want to build the next major tech startup, bring in heavy venture capital funding, hand out stock options to top talent, and eventually ring that bell at a stock exchange for an IPO, you absolutely must pick the C Corp. Moving on to Section 5, how to create them. The 6-step roadmap. Forming either of these structures basically follows 6 macro steps. Step 1, choose your home state. For most beginners, forming right in your home state is by far the easiest and cheapest route. Step 2, pick a unique business name that isn't already taken. Step 3, get a registered agent. This is simply a person or a service available during normal business hours to accept official legal mail for you. Step 4, file your official paperwork and pay the filing fee to your state. Step 5, get a free federal EIN from the IRS website. Think of this like a social security number, but for your business. And Step 6, open a dedicated business bank account. Now listen closely. Never skip getting a registered agent, and never, ever skip setting up that completely separate bank account. Which brings us to Section 6, beginner mistakes to avoid. Don't fall into these traps. Okay, so these are the specific mistakes that can cause a court to pierce the corporate veil. That's just a very fancy legal phrase for completely destroying your liability protection. The biggest rookie traps are skipping your internal rulebook, like your LLC operating agreement or your corporate bylaws. Even if you're the only owner, you have got to get these written down. Another massive trap is simply forgetting to pay your state's annual report fees. It happens all the time. But if you forget to pay, the state will dissolve your business, and poof, your legal wall just vanishes into thin air. But the absolute fastest way to lose your legal wall is mixing your money. So here is the golden rule you should take away from this entire explainer. Always keep your personal and business finances completely separate. Never pay your personal grocery bill from the business account, and please, never deposit a business check directly into your personal checking account. If you mix your money, the law basically assumes your business is just a fake shield, and you will be held personally responsible for all of its debts. And wow, that brings us to the end of our beginner's guide. As our final disclaimer on screen notes, this content is for general educational purposes only and is not legal, tax, or financial advice. Laws really do vary by state, so always consult a professional for your specific situation. Thanks so much for hanging out and learning with me today. If you want more simple, no-fluff business guidance, go ahead and subscribe to the Business Basics Hub channel, hit that notification bell so you know exactly when new explainers drop, and give this explainer a like. Now I want to leave you with this question. Let me know in the comments below. If your business was sued tomorrow, is your personal bank account truly protected? Decide which structure secures your future, keep learning, and I'll see you next time.